Hey guys, welcome everyone. We're just going to get started in a minute, just getting all set up here. Welcome everybody. Give me 1 second and just getting all set up here.
Hey guys, good morning, good morning. Welcome to another live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
As a trader,
Recording in progress.
Hey, good evening everybody. Welcome to Stock Sniper Trading. My name is Ron. My partner is Dave. Welcome guys. Good evening. It's 9 p.m. Eastern and it is Wednesday, March 13. Welcome guys. I'm happy that you guys are all made it here on a late night. Welcome everybody. Everyone on Zoom. Welcome Lou. Welcome Armand. Medita, welcome Sean, welcome bro. 2 a.m. for you guys. I know it's late. Welcome Sonia. Good evening. Paris, welcome. Thanks for joining everyone and everyone on YouTube. We appreciate all of you guys joining. Thank you, Suvakumar. We appreciate you. Jiga, welcome. Tony, thank you for joining as always. We appreciate you. Tracy, Ryan, thank you guys. Guys, just before we get started, we're gonna do something new for our Asian sessions because normally we go 2 weeks. We do some Tokyo sessions and we go 2 weeks into New York. So last night was like really there was no movement in the market. And some days are like that in the Tokyo sessions. So to take advantage of the time together, what we're going to focus on is more swing trading setups. We'll do some analysis on different securities. Tonight we'll do maybe 4 or 5 securities. We'll focus on higher time frame. We'll do maybe weekly, daily, and then we'll go down to the 4 hour and we'll start to look for some possible trades. But these are not going to be for scalping. These are obviously going to be for maybe swing positions that maybe if we see a setup, maybe we take it. Maybe not tonight. Maybe tomorrow. Maybe going into London. Maybe this might be a setup for New York tomorrow morning, or maybe the next day, or maybe possibly setups getting ready for next week. But what we'll do is we'll continue to monitor these throughout our Tokyo sessions, and then when we do our New York sessions together, we'll go right down to the lower time frames, 5 minutes, 1 minute, and then we'll do more scalping when there's much better volume in the markets in New York. So guys, so we're gonna do this for the next couple weeks. So Asian Tokyo sessions will be more focused on higher time frame setups, more swing trading. Some of you guys have been asking, Ron, can we do more swing trading together? Absolutely, we can. We're going to follow the same price action rules that we follow on the lower time frames, but we're going to be focusing on higher time frames. Okay, so and we'll do multiple securities tonight. We'll get started off with gold. Maybe we'll do a little crude oil. Then we'll move into index. We'll do Bitcoin because we said we were going to do it last night. We didn't have time. So we'll do tonight gold, crude oil, we'll do Bitcoin, and then we'll move over maybe either one or both of them, US 30, NASDAQ, S&P, doesn't really matter which one we do, and maybe we'll finish it off with maybe one currency pair, one forex pair, either GBP USD, Euro USD, GJ, or anything. And then every single night we can do different securities. We can update the securities we've already been looking at. We can talk about it, and we can do more higher time frame analysis. And maybe it will give us a good bias, a good perspective of how the markets are moving on a higher time frame, and then will help us also when you move into New York to know what the overall momentum is, what the overall trend is, and maybe when you're scalping or trading on the lower time frames, maybe it can help give you a better bias. Okay, so thank you guys for all joining. I appreciate all of you guys. Let's get started like we normally do. Just quickly, Forex Factory. So you guys were trading today, Wednesday, right over here. And we did have some news earlier in New York, or sorry, in London. We were talking about all of the European folders. This one was the big red folder, the British GDP month over month. So it came out equal to the forecast. So the actual number was exactly what they forecasted. So if you were trading in London, there was possibly a little bit of volatility. Then we moved into New York this morning. There wasn't too much going on, but right here, remember we were talking about this yesterday, this 1 p.m., 1:01 p.m., this USD 30-year bond auction. There was a lot of traders who were trading at this time, and I guess they weren't on the call with us last night, and they were messaging us at 1 o'clock. What was all of this volatility? What happened in the markets? Was there news? So guys, just take a quick little peek at your folders to see the day ahead, plan ahead, so that when you are trading, at least you are aware that at 1:01 p.m. there is going to be something that is volatile. There's a red USD folder. It's about the 30-year bond auction, and that can really swing the specific security that you're trading. So it's good to know about that. Okay, guys. So let's continue to move into tomorrow's news. So we are obviously in the Tokyo session right now, and we're going to move into the London session as we get closer, approaching to 3 a.m. Eastern. So we do have some Swiss franc news coming out of Switzerland at 3:30. So London market opens up here at 3 o'clock. We don't have too much. Like normally we have British news, we got some European news. There's not too much. We just have some news coming out of China, and it's all tentative, so it doesn't really tell us the time when they're releasing this. So, but if you guys are not trading anything concerning the Chinese market, I wouldn't put too much emphasis on these particular folders. But what I would put emphasis on is if you are trading tomorrow morning going into 8:30 a.m. Eastern, this is pretty important stuff right over here. Okay, so we can all count them together. We have 1, 2, 3, 4, 5 red USD folders. So what is that telling us, guys? When we see not only 1 but 2 but 3 but 5 red folders, what is the first thing that's going through our heads? What do you think the markets are going to do tomorrow at this time? They're probably going to be pretty volatile, okay? I don't need to be an expert analysis to even think about this. When I see 1, 2, 3, 4, 5 red folders all at the same time, there's going to be a lot of volatility in the market. So be careful when you're trading around this time. This is where you have to manage your risk. This is where either you are not in a trade, you wait for news to settle, then you start to trade. You might be in a trade going into the news. So you have to ask yourself, what size of a trade, what size lot are you going to be using going into the news? Because if the news it goes in the opposite direction, you could get stopped out. If you're over leveraged, you could lose a lot of your money. You could blow up an account. You could give back your weekly gains, your monthly gains. You could just do something pretty silly that normal retail traders do from time to time, and this is where we need to learn our lessons. So careful trading at this time. There's good volume to be trading right after these folders are released, and you might find it a little bit easier and more you can more follow the direction of the market, because there could be a lot of liquidity grabs. They could spike the high, spike the low, big range candles, completely go after both stop losses, and then it just settles where it opens. But there was a lot of range, so just be careful, because these are pretty important folders. We talked about them yesterday. We got PPI, so we had CPI on Tuesday, and Thursday we had PPI. So again, if you don't know what it is, really quickly, it's a change in the price of finished goods and services sold by producers. And then we always talk about this with core. Core is excluding food and energy, and then they have another reading right below it that is not core. Okay, so then when there is core retail sales, then one is excluding food and energy, another one includes it. Okay, so know which folders you're looking at. PPI month over month right over here. And then we go into our unemployment claims. We have this folder every single Thursday morning coming out of New York at 8:30. It's weekly unemployment claims, week over week. So last week I can see the previous claims were 217,000. Tomorrow they're forecasting 218,000. That's a reading, a forecast of 1,000 more individuals that they're forecasting that are applying for unemployment claims. That's not a lot. That's not a big increase from the previous week, but this will be the actual number that comes in. So we'll see what that is tomorrow. So all I'm trying to say is be careful trading at this time because you have a lot of volatility at this time. You have COMEX market opening up at 820, then you got 5 USD red folders, and it could be pretty volatile. Okay, and then we move into Wall Street. Then 10 a.m. we have some natural gas stores, some business inventories, and then we move into Friday, guys. We'll talk about Friday tomorrow. Just moving forward, earnings whispers. Okay, so we had our earnings today, right over here. Let's move into tomorrow. So tomorrow, Thursday morning, before open, this is pre-market in New York. We have Dollar General, we have Dick's Sporting Goods. So there is some retail outlets over here that will show us maybe a little bit of information on how consumers are spending their money, especially at these Dollar General, Dollarama, the dollar stores. These things are normally where a lot of us are spending our money because it's cheap to shop in these places. But we'll get some news coming out of all of these folders tomorrow. There is pre-market news. Again, we talk about this. If you are trading any one of these individual stocks through equities or options, you might want to focus on an individual security here. These securities might be comprised in the index that you're trading, whether it's NASDAQ, whether it's US 30, S&P. You might want to know what it is comprised of. And then we move into the after hours tomorrow, Thursday after hours. We have Adobe. So this is one I'll be watching in the after hours. It's at 4:05. So you guys know that New York Stock Exchange closes at opens at 9:30 a.m. Eastern, closes at 4 p.m. Eastern. The last hour is what we call power hour from 3 to 4 p.m. And in 5 minutes right after the close, 4:05 p.m. Adobe is reporting. Okay, so Adobe is a pretty big security around the world, and so we're going to see what kind of numbers come out here. Again, if you're trading a specific security at this time and you're wondering what the volatility is, if you're in the after hours, it could be due to Adobe reporting here, and then you have some other securities that will be reporting, some other companies over here. Okay. And guys, this is how our signals come out in the Discord channel right over here. This is our signals Discord. We do have different, we do indices, we do commodities, major forex pairs, minor forex pairs. We're going to get involved in a little bit of crypto. So we give kind of, it comes out with a signal and then with a chart provided. So what we're looking for is a certain area. This is a buy area for gold above 2,167 on the 15-minute time frame. We're looking for more volume on the buy side, liquidity to close above 2,167. If there is pullbacks, here was the first bar on the 15 minutes that closed, then there was a pullback, but what we're looking for is, again, to pick up liquidity, give yourself enough room of a stop loss to allow it to breathe in case it does come down, but every time it comes down is picking up higher low, higher low, higher low, so they are grabbing that liquidity. And then you got to be patient, guys. I see that a lot of traders are lacking patience these days, so you got to allow a trade to develop sometimes. A trade is not always just going to go directly right into profit when you take it. I would love if that happened on all the trades, but we have to be mature enough to understand that sometimes a trade may break a zone and then retrace back, and we got to see if it picks up the bids at the depth of market below us and continue to build, and then naturally it may move in the direction making higher highs, a pullback making a higher low, and continue for a higher high. So if you are patient enough to allow trades to develop, then this trade over here ran for over 120 pips, and you allow it to develop, but there was pullbacks, and you can maybe possibly maximize a move, but it requires patience, like not just with gold, but all types of securities that are released over here with our signals. So this was right over here. This is our NASDAQ. So you can see we're looking for a break of this area where the blue chart is below 18,150. It took some time before it started to develop, but then finally it started to push down. So if you give it a little room to breathe and you understand the structure to the left of the chart, you can maybe potentially get that big move retracing all the way down. Okay, so those are our signals that we send out. Guys on YouTube, thank you guys for joining. We appreciate you guys. I pinned at the top of the YouTube our free Telegram channel, this one right here. If you guys want to join it, we really do appreciate you and encourage you to join this. We do have a lot of information we provide here. We do give free signals in here for you guys. There is right now a Stock Sniper 3 full month giveaway. Which will get you access to all of our live sessions that we do in the Tokyo sessions, in the New York sessions, in London. You get to be part of the private Discord community with our snipers in the group. You get to access all of our education content that we have on the website through boot camps, webinars, and courses. And you also get the SST Scalper Pro signals that I was just talking about. Okay, so just visit our Instagram page. Here's the link right here. Give us a follow, share the post, and comment what's your trading goal and what fuels your ambition. Let us know, guys. Give us a real comment. Let us know what is your trading goal. It can be a long-term goal, it can be a short-term goal, but let us know what your trading goals are, and let us know what fuels your ambition as a trader, and what keeps you motivated and keeps you coming into these markets, whether you're learning, also if you're losing, what keeps you still motivated to get into these markets and keep you ambitious to keep going and keep plugging away. And we want to see everyone's comments, and you can potentially win a 3-month giveaway. We'll be looking at all of the comments, but you do have to follow, share, and comment, okay? And just continue going forward, guys. Everything we do here, so this was like the gold long signal. We're showing you how it can possibly pull back, but we're looking for it to break above here, and then you get to move. The trades are taken over here, and all of our things we do here, the promos, giveaways, these are our links right here to visit our website, guys, stocksnipertrading.com. Thank you for the YouTube channel and all the likes and the subscribes. We appreciate you on that. And if you guys are interested in an EA, Expert Advisor, you can click on this link. It's the SST Kill Shot, and you can visit MQL5 and download the demo, and then maybe purchase a rental if you do enjoy what you see here, and have an Expert Advisor trade for you in the markets. And then also, guys, if you need help passing your prop firms, tradepassing.com. Okay. Let's look into the markets now. So if you're just joining us, what I was explaining is we're going to focus on higher time frames. Okay, so this is going to be for the Tokyo sessions going forward. What we're going to do is we're going to do more swing trade analysis, maybe look for a potential swing trade and update it throughout the day and things like that. But we'll be focusing on that. And then when we move into New York next week, and for the next couple of weeks in New York, then we're going to go back down to our top-down analysis and go right down into the 5 minutes, 1 minute scalping when we have much better volume in the markets to justify scalping. Okay, because if you're scalping in the Tokyo sessions, you can find some moves, but sometimes overall you're not getting the best moves to scalp the markets. Okay, guys, so we will be focusing on higher time frame. Let's take a look at gold. Okay, higher time frame. So how is gold moving on the weekly? Okay, so let's take a weekly outlook, then we're going to bring it down to daily, and then right down to the 4-hour. Okay, just 1 second over here. How's everyone's day going? Normally I always ask how your day is going. Overall, how's your day going? Doesn't have to be anything to do with trading, just overall, how's your day going? Welcome, guys. Franco, yes, we are in Tokyo. I'm glad you're enjoying it. These hours are not the greatest, but we're here. Noor, welcome. Thanks for joining. Knight, thank you for joining. We appreciate you. Aaron, welcome. Just finished the gym and supper. Perfect, man. What did you work out today, Noor? Or, sorry, Aaron. Noor, alhamdulillah. Thank you for joining. Thank you for joining after iftar, Noor. I appreciate you. Chest and buys. Nice. That's different. Normally it's always chest and tries and back and buys. You're doing something different. Welcome, guys. And everyone on YouTube, thank you guys for joining too. Okay? Yeah, you got to mix it up once in a while. I know, shock the body. It's good to do that. Okay, guys, so gold. Okay, so remember, we're not going to get into the 1 minute scalps, the 5 minute scalping. We're going to focus on higher time frames. So let's start off. This is the daily, how we look on the daily. So remember what we were talking about yesterday? Remember what I was saying? We were possibly going to have a green candle come up and trade into 50% of the red candle. Did we not say that yesterday? I believe we did. You can watch yesterday's live video, and we said that together. The way how the doji candle on gold was developing here at this base of support, we had it moving up. Remember, we did our analysis and we were saying, will it look at the bearish candle, look where's 50% of it, and we'll possibly trade right into it. And we actually traded all the way up to here, and we closed above 50% of the bearish previous day red candle. So this is the start of a 2-bar piercing line pattern, and that is a bullish move. But we need today's candle that's opened right now to completely come up and engulf this red candle and maybe close above here, and then maybe we will continue to have an all-time high push above 2200 an ounce for gold. But we could also maybe retrace back down into 50% of yesterday's bullish volume, or may come down and test all the way down here at the support level. So right now, the daily volume of gold is consolidating right in this middle range. So it could be consolidated. Do you guys understand that? Like, before I move forward, do you guys know what I mean by this? Like, so I want you guys to be on the same page with me. If you guys don't understand what I'm saying, it's gonna affect the way how we continue to go forward. So when I'm using all of these words, like a piercing line pattern, what I try to do is simplify it to you guys by always acknowledging where's 50% of the volume. And you can see yesterday we were correct on that analysis, where it came up and it tested into 50% and we kind of closed above it. So if you were in a buy, if you brought it down to the hourly, to the 30-minute, to the 15-minute, I'm sure you could have found some good setups this morning to take the buy positions. Okay, so let's just click on the weekly, take a look on the real higher time frame overall. On the weekly, how is gold moving? So remember, each one of these individual candlesticks represents an entire day of trading. One entire week of trading. So you can see now I'm going back to November of 2022. So you might ask me, Ron, why are we all the way back in October, November of 2022? Because we're on the weekly analysis. So it's going to give us a big broad picture. So you can see, I can see now, look at the 3 weekly tweezer bottoms. So you guys can see how you can use everything that we teach on the lower time frames, how you can use it on the higher time frames. This is when personally I bought some physical gold around here, because I saw how it came down and it made 3 equal lows on the weekly. So even if this was like a 5-minute setup, it came down, back up. It came down, equal low, back up. It came down one more time, another 3 equal lows, and then it went back up, and then we had this bullish momentum. So this is when I started to buy a little bit more physical gold. I like to hold physical gold personally, but I buy at these levels when I know where there's a higher time frame area of support or a nice bottom. There was if you look in the past, you might say, oh Ron, I see areas where I can potentially always look for buys at these type of areas. Absolutely you can. Just like when you're scalping the markets, you can always look for possible plays. You can look when maybe to possibly sell markets on higher time frames, and then start to bring it down to your time frame that you trade. Okay, so over here, just looking over here, when we hit the bottom down at 1600 down in here, we continue to make higher highs, a pullback. This right here is a higher low pullback. So you know what we talk about pivots, and then when I talk about, we always talk about this. So someone's going to say, Ron, you can see this. It's easy when you can see it, but we talk about this all the time. Like this area over here, it's showing us that this is resistance on the weekly. Okay, so just like if this was a 5 minute setup, if I told you guys on this call and I hit this watermark and you had no idea I was on the weekly and I told you guys we're on the 5 minutes, you guys would have absolutely no idea. These would be 5 minute candles, but they're actually weekly candles. But that's what a candlestick has, the same characteristics. So once you learn the characteristics, you're good to go. You can go and trade whatever time frame your heart desires, whatever you want to do. If you want to be a swing trader, you can absolutely be the best swing trader you can be. Look over here. This was resistance. It was red. It came up. I made it red. It came back down. We closed right there. There's our first weekly bar candle closing above. December 27, right Christmas time. 2022, we closed above. There's our flip in the market. We had the bullish volume close above. Now what we got to do is change our box a different color, make it green. And we see we got the push. It broke this previous high, came up, but couldn't take out these highs. And then naturally what happened was it got rejected 1 time, 2 times, 3 times, and it pulled right back down. Where? Into our zone of demand, and we had a nice big bullish engulfing candle print. Next week came down bearish again and picked up all the liquidity. There's your big rejection wick, and it closed as a bullish pin bar, almost a hammer candle. And then there's your weekly candle. Look at it. You know when we talk about 5 minute, 1 minute ignited bars, there's a weekly ignited bar. The start of March 13, 2023. Look at the upper wick on that bullish pin bar. Short wick, there's your pop. So, you know when we talk about this, when I'm scalping, when I see this setup on a 1 minute, 99.9% of the time I'm taking this buy on a 1 minute. 99.9% of the time I'm taking this buy on a 5 minute. 99.9% of the time, if I'm trading a weekly candle, I'm buying this setup. Do you guys know what I mean by that? That I don't care what time frame I'm on, because I'm looking at the physical price action of the candlesticks. Does this make sense, guys, or confusing? I gotta know. Because everybody's on different levels. So someone might understand what I'm saying, and someone else has no idea what I'm saying. But don't be shy. If you have no idea what I'm talking about, slow me down. Because I know this stuff. I don't know if you know this or not. And if you're quiet and you're not saying anything or commenting, I have no idea what your level is. So I want everybody to be on the same page, guys. I want us to work together as a team. And okay, so from this, I want you guys to understand that this area was resistance. And as soon as one bar closed above, we flip the zone and make it green. Some of you guys are experts at this. You guys got this. Next thing is a pullback came down. And then now look at your physical candlesticks that are printed here. We have a bullish engulfing bar. That is the strongest candlestick we basically can get coming out of a support zone. It engulfed the sellers. It's respecting this green area. Then our second candle, the second week, came down red, right into our green box, very technical, and then it got rejected with the buyers, so they picked up all the liquidity, and then it closed as a bullish pin bar, almost a hammer candlestick, but technically it's not a hammer because of the upper wick. And then the firecracker approach, short wick, and then look at our next weekly candle. We assume it's going to open red and come back down? It didn't. It was an ignited bar. Okay, so now we put the pieces of the puzzle together, one piece at a time. Everything is making sense, and then this gives me now conviction and confluence to take the trade. This gives me now, I want to take the trade as a buy, and then the only other thing I have to do is my risk management. How much am I willing to risk on this trade? Obviously, when we're trading higher time frame, you got to trade maybe smaller lot sizing, because you're going to have a bigger stop loss than you are when you're intraday trading the markets on maybe a 15-minute, 5-minute, the lower time frames. So you're going to obviously have to have a bigger stop loss, but our goal is to get bigger reward. This big weekly candle, like if we were just targeting to come into trade into this liquidity, like right over here, just right up to those bodies, just right there, just to fill right up to that red line to get up to these bodies. You know, I measure the move. If I'm taking the buy at the top of the wick, I measure up to that red line, and then I know that that's a big move, guys. Okay, that's a big move from 1870 to 1927. So that's a $60 move on gold. That's 600 pips. So that's a big move. Not only that, then it continued to push, and then what we got to do is just look to see, will it fill those wicks? It did, and then it's targeting now our upper area right over there. So then we could look up to there, and it moved over 1,000 pips. So that, do you understand what I mean by a swing position? This is if you're trading weekly candles. But what I would do as this is developing, I would start to mark up this area and maybe not trade the weekly, but maybe watch the daily or the 4 hours in this location. Okay, so we're going to continue to do that on these Tokyo sessions together, and maybe we'll find some good setups together. It might take time for them to develop, but that's going to be our plan going forward on these Tokyo sessions. We're not going to be scalping the markets on the 1-5 minutes. We'll be looking for good setups, possible swing trades, and then we'll save all the scalping for New York. Okay, so now what is the next thing we have to do? We have to continue with the identified zone and bring it into the future, because I don't want someone to say, Ron, it's easy, we can see it right now. You know, everything makes sense when we can see it, but gold is trading up here now. Okay, but what I'm trying to say is we have an established zone here that was resistance and then turned to support, and then look right there again. In October of 2023, if you just brought your box across, this is what we've been telling you from day one 5 years ago, is bring your box across. And then someone asked me, Ron, how far across do you bring it? And I tell you guys the same thing I tell you guys every single day. Bring it as far into the future as you want. What does that mean? It means I bring it as far as I have a chart on my screen. And then look at where I am. I'm in April of 2026. You know, like what year are we in? 2024 right now. We're March, April 2024. This is 2 years ahead. Okay, some of you guys think, okay, Ron's crazy. What is he talking about? But what if gold ever retraces back down and comes down bearish right back into this green box? What is the probability that's going to happen if it comes back down in here? Whether it's 6 months from now, 1 year from now, 2 years from now, 5 years from now, what do you think will happen in here? Just logically. God knows? No, we know. It could possibly be where the buyers are waiting, because they bought here, and maybe it's going to be a triple bottom. When it comes in here, that's what we could possibly see. Okay? Yeah, I was just playing with, only God knows, but maybe our price action analysis will give us a good probability that we consider maybe the buyers to be here, and that might be a possible setup. Then again, we look for a rejection wick, we look for maybe a bullish engulfing candle print at this area, but until that time comes, I don't need to worry about this zone, but I can still leave it on my chart. It's pending in the market. It's waiting to be activated. It's very, very far away, but we have other zones now to build up to. So where are our other zones now? What about our previous all-time high wicks on gold? 2075 up here. All-time high wick in 2020. It tested again, all-time high wick in 2022. We had a third attempt right here just recently, May of 2023, and then we broke out with volume. So now a new zone, what I'm doing is, because something has already been established in the market, right there, the first all-time high, bring it across, but remember, what is the wick? It's red. Okay, it rejected here, so I make the box red. Going into the next all-time high red, bring your box across into the future. You could have had maybe you missed to short the first all-time high. We were live scalping this. I remember this on the 1 minute candles when we hit this. It was a big reaction when we hit this. But then if you did the same thing, you had your red box go across from the previous all-time high, you possibly could have caught it right here the second time. And then the third time, you could have caught it right there and gold sold off. So now we got to continue with this box across. Now, I'm going to ask you guys, what's going on at the red box currently as we're speaking? Is the volume above or below the red box? I know it's a very simple question. I know some of you guys are saying, Ron, this is too easy. But let's all work together. So I make sure if someone started today with us that they're on the right page. Is the volume above or below the red box? What do you guys think? Not a trick question. Above. Okay, see the green bar? It's above. So what do we do? What's the next thing we do when volume is above? We've established a zone, we turn it green. Yeah, very simple, guys. Keep trading simple. Just like that. Just trade it green now, or turn it green. And what's the next thing? Once we change it green, do we just stop there? Armand, do we just stop there, bro? No. What we got to do is bring it across, right? How far? Armand, how far should we bring it? Let's bring it to match our green box below us. Let's bring it April 2026. Okay. Now, this one might be more active compared to this one. Okay, you see we're establishing zones in the market. We're figuring where the blocks are in the market. Now, are we going to ever come back down to this block, 2064? We may come back down. So we might see something come down red. And then what's the first probable scenario that might happen at this green box? It might come back down in here. And this is the weekly candle that closed above, and that was the strong candle. So maybe when it comes back down here, it's a pullback, healthy pullback, and this is where the big buyers might be waiting. And then they're waiting to take it back up, right? That might be our first line of demand in the market. But there's other zones that we can start to see develop as well. We don't have to just rely on this one. But it's not to say that, I want to make this clear to everybody, that if we do come down in here, that doesn't mean it's always going to just bounce and go back up. Okay, you also have to have a little common sense here and watch what's happening, because there could be a move that the sellers break right through the green box and then it closes below the green box, and then we come back up, and then in that case, then what we do is, if the red volume comes down and doesn't respect our green box and closes below, then our next step is to take the green box, don't change the size of it, just change the color. Go from green to red. Why? Because the volume is below. So understand, guys, these are what we call static zones in the market. They're static because we don't change them. We just change the color. So I want to correct myself. When I say that, I mean they're static that I don't change them. I just change the color, okay? The only thing that moves is the volume. The volume is the only thing that's variable in the market. It moves up and down. But if it closes below, I know that the sellers had full control. They broke this demand area and they closed it with authority below that zone. And then when we have a pullback, when we come down here, the buyers could be waiting down here, and then we assume it's going to come up green to retest the higher time frame block or the bigger zone. And then if it gets rejected, that's when now we know that this area, this zone, flipped from demand to supply. And then we look to short the market and then place our stop loss above the zone. And maybe we'll have a short in gold. Okay, do you guys understand that? So I can move forward. Do we understand that a zone is not always going to be demand? The only thing that will change it is the volume, whether it closes above or below. And then the third thing, okay, so this is now the third thing. You guys know that there could be fake outs at these areas. Raise your hand if you know what I mean by a fake out in the market. I know you guys don't have your camera on. I can't see you guys, but I know you guys are at home raising your hand. Or hit the like button on YouTube or put the thumbs up. You guys know that the market is kind of manipulated, right? It's manipulated in a way for me and you not to win, for me and you not to make money. It's manipulated for the big guys to make all the money, for the big corporations, for the big banks, for the big institutions. They're the guys that this platform is designed for. It's designed for them to take all of our money and put it in their pocket. If you guys don't know that, then we got a lot to learn, okay? So that's rule number one in trading. Make sure you understand that these markets are not designed for me and you to make money, okay? Wink, wink, wink. It's not for us to make money, but some of us do good at the markets. We're humble. and we teach how to do it, and we hope that you guys are learning with us. Inshallah, we hope you're learning with us, okay? So we're all working together at this. But we need to understand that the market fakes us out, okay? You know, in a basketball game, if I'm playing you one-on-one, I'm going to do a crossover, I'm going to fake you out one way, and I'm going to go the other way. It's just like in sports, okay? So think about trading as a sport. The other team doesn't want us to win. Wink, wink, wink. They don't want us to win. So we have to figure out what their move is. It's like a game of chess. We want to be one step ahead of them, but we got to understand how they move. So when it comes down to here, you know that it can break down here and then come right back up, right? Because we got to wait for the candles to close. If we go before the candle closes, what do we call it? Who knows what we call it before the candle closes? Anybody know? Come on, guys, let's make this call interactive. Let's have some fun here. Impulse. There you go. There you go. Perfect. So it's an impulse, a fake out candle. It comes down there impulsively, but it has not closed. So we don't know the entire direction until it physically closes. So if you're on a weekly candle or daily, you have to physically wait for that candle to close. That's why I hate trading on weekly and daily, because I'm an impulsive person. I like to trade on 1 minute, 5 minutes, get in and out of the market. But I can show you guys, I can be very, very patient as well, and I can swing trade with the best of them as well. Because all I do is just follow the same price action. But I know that I can't get rewarded right away. This type of trading takes time to set up, but the reward is special. It's bigger than 15, 20, 30 pips. The reward might be 200, 300, 500, or 1,000 pips, okay? So understand that the bigger reward, we have to wait patiently for it to happen. So the market could break, and then they come down here and they take out all of the stop losses. They gather up all the liquidity. They take out all the pending orders down there. The big market makers have all of the money. They've kind of secured the bag, wink, 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 and it comes right back up. And what do? They close it above that zone, correct? And then we pull back, and then what do? If we see this setup, if we see it come down red, they come down, no close below there. Maybe it catches a wick and comes back up, or it does close, and then the next week or is a bullish engulfing candle, come right back up, and there was no actual physical retest to push the move down. Now I know that they faked the market down and came right back up, closed it above the zone, and the volume again is variable, and the volume is again above the zone. So I just do the same thing. I don't change the size of the zone, I change the color. And I can keep these zones on my chart all day, every day, all of the week. And then I just continue to follow the volume. And then what I look for is the retest and the buyers to step in the market and then take it back up to the highs. So then when that happens, I look for a buy, maybe to buy above the high there. Like I see it come down, fake out the market. I didn't fall for the sell. I see it come back up, close above here. I wait for the retest. Then when I see it breaking, maybe the high, maybe that's where I set up my buy. And then the stop loss, depending on where I want to put my stop loss, maybe I put my stop loss below the previous fake out low. Or if I want to give it more room to breathe, I see that there's some structure right over here. Maybe I place it below the structure right here. And then my reward is maybe I want to take it back up to test the previous highs and maybe a new all-time high. Okay, does that make sense, guys? That's when I'm setting up my R&R, my risk to reward. And you can see with a setup like this, just to break the all-time high, you're looking at about a 1.1 to 4 on your 1 to 1.4 on your money. So it's basically if you bet $1, you make $1.40. If you bet $10, you make $14. You bet $100, you can possibly make $140. Not the greatest reward, but when you're swing trading, maybe you want a bigger reward, 1 to 2, 1 to 3, 1 to 5 plus. Okay, depending what security you're trading and how long you're willing to hold. But you're looking for a bigger move. Okay, so that's just understanding your simple support resistance, your supply demand 101. Very simple stuff, okay? So what we're going to do is we're going to continue moving on the weekly, okay? So what's going on the weekly right now? I can see what it's doing over here. Okay, so this week, Monday, March 4th, this was last week. Was last week bullish on gold? Absolutely it was. We took out the previous all-time high, we filled the wick, and we made a new all-time high. So what we can do to record our new all-time high, let's use a purple line at the all-time high wick. Everybody should know this. 2,195 is our new all-time high on gold, just shy of 2,200. Okay, and now when I'm trying to maybe find a zone, what's the next thing I'm possibly going to do? I'm going to look at last week's weekly bullish candle from the open to the close, and then I'm going to figure out where's 50% of the volume, right? That's what we normally do. And then I use a yellow line to determine maybe a different time frame. So what do you think is about half of it? Right about there? Is that about half the volume? Not the, and I don't look at the entire range, okay? This is where someone asked me, Ron, do you look at the entire range of the wick? Some traders do that, and if you do it, you're absolutely correct too. But I'm just saying how I personally do it. I look at the actual real volume in the candle. This is the real volume. Where it opens and it closes, that's what's considered the real volume. The wicks represent the entire range. You can mark your lines with the wicks if you like, the entire range. That's up to you. If you're going to do it, all I can say is be consistent with it. Okay, do you guys know what I mean by that? If you're gonna measure the entire range of a candle from the bottom wick to the high wick, just make sure you're consistent with it. Make sure you do it on all time frames. Make sure you do it on all your securities so you don't confuse yourself. I do it, I'm telling you personally how I do it. I do it on the real bodies from the open to the close, and I stay pretty consistent with it always. Depending any security I'm trading, any time frame I'm trading, I stay with that rule, and it is pretty consistent. Will I say it's always accurate? No. Trading is not always accurate, but it's pretty gives you a good probability. Okay, so that's what trading is. We want to find good probabilities. When we find good probabilities in mathematics, we can do good. Okay, that's what trading is, just finding the best probabilities that we can. Okay, and anything above 60, 70, 80% probability is a fantastic trade. So make sure, guys, you understand, you don't need to be 100% trader to be an elite trader in the markets. If you are 100%, wow, like you are like, you should be on Wall Street. Like you should be showing your skills on Wall Street. But if you're a 70, 80% trader, you are an elite trader. Like you are at a very high level. I understand that. If you're a 50, 60% trader as well, you got to understand that you can still do good in these markets even at 50, 60% of the time if you manage your risk properly. Okay, you got to know that. We have traders at SST who trade at 50, 60%, and they are doing really well. They're doing weekly cash outs, they're passing challenges, but they know how to utilize their risk management. They're not over leveraging, but they know how to utilize their risk and manage it really well. Okay, and they're right, maybe 60% of the time with good risk management, they're making a little bit of money. Okay, so what I did there was just measure where's about 50% of the bullish volume, because I want to give the benefit of the doubt that if it pulls back into this area around 2,130, that the gold buyers could be waiting at a higher low to continue to buy the market. If it cannot hold here, then yes, it has a high probability it will come back down to 2,070 and test our green box down in here. Okay, so let's just now continue to follow the weekly volume. And look at now how long we have on this weekly candle. We have 1 day and 20 hours. It's Wednesday night. We only have Thursday and Friday to go. And then this weekly gold candle is going to close. We'll figure out where it's going to close. And then I do a little bit of analysis on the weekend. And then we get ready to see how it will open next week. So we had our all-time high, and we closed with a lot of bullish volume in gold. Still, we almost closed near the high. And then look at how they opened this week. It opened and it went up green. We came up green, but you see, it didn't really take out the all-time high. So we have a weekly lower high, and it pushed it down. So you see where the body is and the two wicks. Now this is where I start to draw my weekly red box. Okay, and guys, do this together if we can, all on the same charts. Okay, and then you guys can watch this on your own screen for the next few days and maybe go into next week. Okay, so what did I just do there? What I did was where the all-time high was, and then the previous volume that traded in here this week, it got rejected and we're down here. So this is, I see a rejection and a rejection. So this is a zone of supply. And it's a red box. I measured it from the all-time high to where the two bodies are. Do you guys understand that? Thumbs up if we got that. And guys, sorry about this, okay? I like, this is with me. I tend to explain a lot of concepts because I want to make sure everybody knows it. I was planning on doing like 4 or 5 charts today, but we can just go right through the charts and look for setups. But do you guys like this type of how I break things down? Do you guys learn better? Is it better education for you guys? Are you guys following easier? Let me know, because I tell you guys, I know how to do this. I don't need to like keep doing this for myself. I do this for you guys. If you guys want to go right into the charts and look for setups, we can do that. No problem. We can bang out 5 charts right away. But this will help you guys. And not only will this help you for swing trading, this will help you for scalping. This will help you for any time frame. Think about this as if these were 5-minute candles and you want to learn how to scalp the market. It's the same thing, guys. I'm telling you, it's the same thing. I wouldn't be wasting your time here. I know your time is very valuable. I know it's very late for some of you guys. It's 3 in the morning if you guys are in Europe. I know it's late for you guys. So I'm not here to honestly waste your time. I want to give you guys as much as I can, so you guys understand this. So we figured our red box, and then now what's my next step? The next step is what we did with the green boxes. Bring it across. Okay, just bring it all the way. How far? Someone says, Ron, always ask me, Ron, how far do you bring it? Let's be consistent, right? Trading is consistency. So you see all of my boxes, they're all pretty consistent. I have them all closing right here. April 20. Look at that, guys. April 20, 4/20, 2026. I can guarantee you guys, in April 20th, 2026, I'll probably have 4 joints in my mouth at this time. Okay? So I didn't pick this date by accident. I am telling you, it just, it's April 20. This is where I had no idea. I just said 2026. It came all the way out here. So that's telling us, I think we all need to smoke a joint. Not during the month of Ramadan. We'll wait till Ramadan is over and then we'll smoke joints, okay? Right now we're not smoking. After Ramadan. Let's get through Ramadan first and then we'll all smoke together. But right now, Ron doesn't smoke. Okay, so stretch it all the way across. And then you've done your job. You've done similar here like Bookmap. You know Bookmap, where there's big orders that come in the market and they're just sitting, waiting in there. We can see the heat in the market. That's kind of what we're doing. We're kind of putting our own heat in the market, and then we allow the volume to move at these levels, okay? So now I've got an upper area of all-time supply. I've got a lower area of maybe passive demand waiting to get triggered, and then I've located 50% of the current volume. Now guys, I'm going to blow your minds right now. Get ready. So I'm not going to wait for the volume to come all the way down here. I might be able to maybe take a trade over here. So again, this area, the yellow line, we're going to use for reference. And what's the other thing Ron does? Maybe let's make a green box right around this area. Okay, so let's go to our rectangle box again. And this is what I do. Again, this is me personally. I go a little bit above and a little bit below. But now, you see there where the wick is right here? Look guys, pay attention. See the low wick of this week, not of the week, right here? And see how it lines up with this wick right here? And then I'm going to bring it down to my yellow line, okay? So let's watch right now. This is all I'm doing. You got to see that. It's fast. Okay, did you guys just see what I did there? Probably some of you guys didn't see it. I know some of you guys are not paying attention. Right here. See that wick where it came down red, and stopped right there? And then you see this other all-time high wick where it came right in there and it got rejected. Okay, so now I've kind of trapped that kind of area right in here. And then what I can do is now I can bring it across. Again, how far? Let's bring it all the way to be consistent with our other blocks in the market. Now, what this is called is I'm trapping the volume as much as I can, okay? So you can see if we get red volume, maybe close below this green box, I know that they've closed it below 50% of the bullish candle, and then that might get the move coming down. So I might be waiting down here with an alert, maybe on a daily or a 4-hour candle, to see if the market can come back down, cut through this green box, and close below there. Then come back up in the green box, but then I flip it red, and it maybe gets rejected, and then right there, maybe I'm looking for a sell to take it all the way back down to the green box, okay? And then, before I even take that trade, I measure it. I measure the move. If I'm looking to sell from there to come down there, I measure it. It's about let's take a look. 2,125 to 2,000, let's say 2,075. That's a $50 move. That's 500 pips. 500, not 50, not 5 pips. You know, when we're looking for those on the small time scalps, this is 500. This might be enough to hit your weekly goal, and you don't have to stress yourself out by scalping the markets. This is for some traders that have a busy lifestyle. You know, some of you guys are working 9 to 5 jobs. Some of you guys are working shift work. Some of you guys are working, you guys are stay-at-home mom and dad. Some of you guys are, it's just a busy life. If you got a busy life, some of you guys are students, you're at school. You don't have all day to be scalping the markets. You got to start to maybe teach yourself how to look for setups like this on higher time frames so that maybe you guys can hit your 100, 200, 300, 500, maybe 1,000 pips for the week, and you go smaller sizing. But again, if you go $1 per pip, you hit 500 pips, you can make 500 US dollars. That's not bad, and it's not as stressful. But you still got to be patient. You got to wait for the market to come to you, because you got to treat it just like any other time frame. Okay, so now if it comes back down, I'm gonna assume that this is still a buy level. Okay, because it hasn't really broke. So let's just follow the candle right now this week. So we came red all the way down. It picked up a higher low. It still respected 50% of the volume, and we came right back up. So this is where the volume is trading right now. Okay, today, you know, we might flip this candle. What happens on the week if we flip? If it comes back up here and flips green, we might be coming up to take out the weekly high and maybe the all-time high, and gold is going to continue to drive. Okay, they might maybe push it back down. Like, let's say this weekly volume comes back down red, 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 red to fill the wick. That could be a possible short, where I could look to short on maybe the daily or the 4-hour to just fill the wick. And then I can collect maybe 300 pips to push right back down, and then maybe a little extension to come down to the possible bottom of the green box. And if I'm measuring that, I'm looking for maybe a possible sell to come down maybe 400 pips just to fill the wick red, and then maybe push in down to this green box. Okay, so what is our overall bias on the weekly? What is our overall bias? Overall meaning higher time frame. Okay, what do you guys think higher time frame for gold weekly? Noor, you're bullish. Carlos, hella bullish? Yes, sir. Okay, so I hope everybody says that on the weekly, gold, higher time frame, monthly, weekly is bullish, okay? If we're saying bearish, I need to know why you're saying bearish. You got to explain it to me, because our overall bias is bullish, okay? So you can see it made a high, pullback, respected this area, didn't really break any structure. We got a higher high, all-time high, previous all-time high, pull back, higher low, and we continued to break where we pulled back, and it's still a higher low. So, but also what could happen, guys? What else could happen inside here? What's that big word that starts with a C? The big C word, consolidate. You got it, Samuel. So maybe we may consolidate in here, okay? Gold could trade inside here for the next few days, right? And it's just consolidating, okay? And we have to know that it can do that. So if we're looking for swing trades, we got to understand that it could just come down, go back up, come down, go back up inside this zone. And then maybe it needs to accumulate for another week before they'll either redistribute the volume again to new all-time highs, or they'll break it down to come down and test down in here. But we got to be also patient and disciplined and wait for that, okay? But I'm not here to trade weekly candles with you guys, so I was just kind of giving a weekly analysis. But now what we do is, what's the next thing? We go weekly, now into daily, correct? So we're going to break it down. Look at the daily candles now, okay? So, swing traders, where are you guys? Where are you guys? Look over here. Like, this was that red zone, what we had, red zone. And then look at right over here, starting again. I say this every single call. Pay attention to time and sales. Time and sales meaning, is it a Monday? Is it Friday? Is it the first of the month? Is it the last day of the month? Is it the beginning of the week? Is it the end of the week? Is it the start of the day, end of the day? Do you guys know what I mean by that? You have to know this, guys. This is like common sense for trading. Look at when they developed this move. Remember, I told you, market makers are engineers by trade. Some of you guys are engineers by trade as well. Some of you guys are you are an engineer by profession. You get paid at your job to be an electrical, chemical, computer, civil engineer, okay? Market makers are engineers as well. They engineer moves in the markets. So you and I, we have to be educated and learn what is an engineered move. Look at how they're basically throwing it at us in our face. Look at when they engineered this big bullish candle. Friday, March the 1st. And look at how it was a big bullish candle. They got it up there with all the volume to come and fill this entire imbalance. And then look at how they started Monday, the new week. So they finished the week off strong. Why? Because they were pushing this move. It was designed to do this. Okay, if you think it wasn't designed to do this, then we'll have a conversation together. But this was an engineered move to fill the previous high wick, all-time high wick, and take it further. It just, did it happen just by reason? You know, did gold just all of a sudden just get a flood of volume just on this date just because? No, it was all manipulated to do this move, guys. You guys got to understand this. So if you start to figure out the move of the market, you will be that much better of a trader and have a bias. And sometimes when you watch it play out, then you're more confident to take the trade as opposed to not take the trade. And be confident to take the trade, guys. Don't be scared. If everything is leading up to what it's designed to do, go in for it, okay? You can see how it closed near the high. The next Monday, the daily candle, again, we assume it was red. It came down red just a tiny bit. But did it come into 50% of this previous green candle? Because I guarantee you, if I was trading, I would have had a yellow line right at halfway point, you know? But it was a higher low. So I know that it didn't even need to come down here to pick that up. It broke out to the high, and then that's it. Broke the high wick. Look at the black chart to the left of the chart. All it had to do was kind of break these two wicks and then just fill that big wick. And it continued to fill, close near the high. Again, on this day, I would measure 50%. And look at how nice whole number too when you learn psychological zones. Look how nicely 50% of that volume is 2100 on the dot. But did it come into 50%? No. Again, higher low. Short wick. It's not an abnormal long wick, so it had enough momentum to break the wick and continue for a new high. Then it pulled back again. Mark up where is 50% of that candle, 21, and again it still respected it. This big body candle had a lot of work to do on Wednesday to fill that wick, but it did and continued to drive. Now look at where we are. We're kind of overextended. Do I need to use an RSI indicator to tell me where we are? No. Like, see how RSI indicator is telling us we are completely overbought on the daily? If we see this pattern, do you think we need the RSI indicator to tell us we're overbought? I don't think so. When you have 1, 2, 3, 4, 5, 6, 7 green candles, daily candles in a row, I guarantee you it's going to be getting overbought, any security, okay? So now, see how we're consolidating? Now it all-time high, we got a lower high, lower high, lower high. So it came down red Tuesday, and then did it break these levels? No, it came back up green like we were saying yesterday. We were talking about this yesterday. Would it close above 50%? So now on the daily, I got to do a little bit of analysis in here. So what I do is the bearish candle, again, not the entire range, but the body. So we opened and we closed right here. So this was from yesterday. We located 2170. We were looking at 50% of that red body right there. Okay. So, I don't know why I'm selecting this horizontal ray. I want the long one right here. Okay, so 2170. Do you guys know why I'm placing a yellow line right here at 2170? That was the previous day to represent 50% of the bearish candle. So what I was looking for, we were saying, remember yesterday, gold wasn't really moving. It was that little doji candle. But I said when more volume comes in the market in London and New York, there's going to be moves. So we assumed yesterday that it would come up green, 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 test into 50%, and we would have a reaction there. We continued to break out, almost engulfed the red candle, but it didn't. And then it sold off near the end of the day, and it closed. And it closed a majority of the volume still above 50%. And here's the start of today's daily doji candle. So if we follow today's daily candle, they opened it and it came up green. And it was right up there, 2177. We didn't even have enough momentum to take out yesterday's high. So when I'm trading now, I figure out where's my daily high, purple line. And then we got rejected and it's coming down and we're trading right in here, 2173. Look, it's only a 40 pip range. So you can see even scalping right now, you don't have a big range to scalp. That's all you got is 77, 73, $4 range is for 40 pips. So if you're scalping gold right now, you got to understand, you got to know that it's not the best time to be scalping. You got to wait for more volume, okay? Unless you're looking for just 10, 15, 20 pip trades. But now on the daily, do we see a little bit of a pattern forming? Do you guys see a pattern? We came up bullish. So I consider like this entire area as one move. So it came up and then the red candle brought us right back down. So we kind of found where our neckline is, and now we're coming right back up. So look what could happen. This is the next leg up. Are we going to continue today to push into the red area? Maybe might be an actual physical double top and do something like that. Okay, gold might continue to trade into here, but then there would be the actual like kind of physical double top. It might test the all-time high top up there, and it might also maybe push for a new high. Why? Because there's liquidity up here. Okay, remember that big word, liquidity? There's pending orders waiting up there. If the market can see the gold all-time high orders waiting up there, maybe they want to engineer the move to come up above 2200, grab all the pending orders. You know all those FOMO buyers that are, when it hits 2200, they're all buying because they think gold is going to go 2500. The market might see those pending orders like sitting ducks waiting to get triggered or activated up there. And then once they come up there, they grab those orders, they get all the FOMO buyers, and then they have a nasty candle bringing down. So then they got the money, and then they're reversing the market. That could be one pattern waiting to develop. It's not here yet because we're down here. So maybe it doesn't even get up there. Maybe just that's it. Today is a lower high, like right in there at the purple line, maybe. And then they're going to maybe continue to push the market down. So we came up maybe into here. Maybe if this candle starts coming down red and we break this yellow line, we might continue to drop down red. And then it might start to bearish engulf this green bar that we had yesterday. And maybe it will come down here with more selling momentum, creating a lower high, lower high, lower high. And then maybe take out these lows, and then we're going to trade into this green box. And it might be a red move coming down into the green box. And then again, when it gets to the bottom of the green box, that yellow line, we have to respect that area because we gave the benefit of the doubt. That's where the big buyers are waiting. And then that's where we could maybe potentially see the buyers step in and then bring it right back up. But if you're selling it from like below that yellow line and you're catching all these pips down here, you still have to know that you're counter trading the overall market, because remember we all said the overall is very bullish. So this might be like a red pullback coming down, and then that's where the buyers are waiting. Then you might have to close your position, accept the money, take the money, and respect where the buyers are, because the buyers could bring it right back up. But if the sellers kind of close it below that zone, then you know what we do. We got to flip the red box or the green box red, and then maybe if it comes back in here and then it's a lower high and then they push it down, then the market may continue dumping, okay, making lower lows, lower highs. And if you're in the short here, then you kind of caught the move, and maybe you can put a trailing stop down with it. Maybe you can start to scale out a little bit and keep a little bit running. Start bringing your stop loss down to maybe break even and start controlling your risk. Okay, so that's how we're trading on the daily. Now we've got some zones. Let's go to the 4H. I don't normally go on the 4H with you guys, but when we're swing trading, this is what we're going to be looking for the 4H. So these now are 4-hour candles. So now we went from weekly, daily to 4-hour. So key areas, what we want to watch are maybe our yellow line, maybe what happens at the purple line. So if we continue maybe to break down, like I can see the 4-hour candles are now consolidating inside here. Consolidate, consolidate, green, come back down, red. If I'm looking for maybe a possible sell down here, as long as it's pushing down, continue to come down, what I could do is I could look for a possible sell below the yellow line, 2,170, and then where would be my target? Well, my target would be, again, look at how much support there is right around this area. Look at where all the bodies are concentrated, right here. Okay, let's go yellow line right there so you can visually see it. This area. See how there's a body, 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 and you see they're just impulse moves that come down, back up. Impulse move, back up. Impulse, back up. Impulse, back up. Impulse, back up. Impulse, back up. Here again, the yellow line, impulse, back up. Impulse, back up. See how all of the volume is closing above that yellow line. So that might be a target for me. If I take the possible 4-hour sell below there, that might be my target to come down there. Okay, and then I measure the move. If I can't do the math in my head, I measure from the yellow line to the yellow line, and it's approximately what do we got here? From 120, 130 pip move. Okay. From 2,170 to 2,150. That's $13 move, 130 pips. And then if I get maybe momentum continue to push down, then where could we go? Maybe halfway, right into there to the next body, right there. And then I got a 150 pip move. If it wants to come all the way down to the green box, to these lows, it could be potentially a 200 pip move. And then I just continue my sell. Okay, so I'm going to leave this on gold, guys. This is going to be a trade signal. Okay, let's all mark up the charts and we'll watch this on your charts. So I'm going to put right click here. I'm going to add an alert. Okay, so I'm going to add an alert. I'm going to create it. And it's on my gold chart now. Okay, there's the clock. So if the red volume on the 4-hour or hourly ever comes down here, I will get an alert there. And then what I have to do is I have to watch and see if like a 4-hour candle will close below here, maybe pull back into here and then get rejected, and then I take my sell, and then first target is the yellow line, and then because there could be just buyers waiting there, and then bring it right back up just like they did all over here and just like they did there. But I could get one of these red candles breaking just like it did here. So if I get that, I still have to understand that I got to respect where the buyers are, and they're in here. So if I get that move 100, 150, maybe 200 pips, I got to start to secure a little bit down here, maybe secure 75% of the trade, leave 25% running just in case it continues to go down bearish. But I don't want it to, I'm in profit coming all the way down, and then I don't respect this area, then it bounces and comes back up, and it's making a new all-time high, and then I lose out on those pips. Okay, so that could be sell side for gold on a higher time frame. But someone will say, Ron, what about maybe buy side? Okay, so if we kind of figure out where it's consolidating, maybe I open up my consolidated zone, like this entire zone, and I allow it to trade inside here. It might come up green, red, but then if we start to close, see this, there was an impulse break today, this afternoon at 1 o'clock, right before COMEX market closed at 1:30. There was a strong move on gold, it broke through there, but no volume closed above this area, 2,178. It got rejected and came back down. So if I start to see maybe green volume starting to come back up and close above here, maybe if it retests this, I could be looking for a buy to come to fill up to those bodies right there, 2,186, and maybe potentially coming to the all-time high. Okay, so as long as the market below me is still making higher lows and continuing to build, and it doesn't really break this area, then I'm still going with bullish pattern. Because look right now, it could be potentially developing like this, where it came down this leg, going back up this leg. So what happens if it comes back down here, but there's no sell, it's a liquidity grab, it's a red candle that just breaks impulsively, comes back up and closes above here. It might be a higher low, and then that's it. It's getting ready to potentially break out, and then I could be looking for a buy above there. Okay, so another thing is just the bias, how the market is developing. Right now it's early to say, but just in case, I want to be ready. And then I wait for the volume to get to me, and then I decide when the volume is there. Okay, does that make sense, guys? I could be looking for maybe a short squeeze buy to continue to drive, but the way how it's looking, it could be leaning towards maybe sell side, because see here, it's a lower high from over here, so it looks like this type of pattern. It looks like the bigger M, where it came up, back down, we found our neckline there, it's coming back up, and then now maybe like a lower high right there, and then they drop it right there, break it, close it, and then that looks like a nice sell setup. Okay, but I cannot neglect the fact that it may turn bullish and continue to break out. Okay, it's gold, right? And gold is very bullish right now. So, and then if there's news in the market, tomorrow we have the CPI. Remember tomorrow's CPI? Okay, so what is good for the US dollar? Remember what we were saying? CPI tomorrow, Thursday. Sorry, PPI, my bad. Carlos, thank you. PPI. So what we were talking about over here, the US dollar, PPI, you know what it says? See the numbers? Forecasting 0.2%, 0.5%, 0.3%, 0.8%, and we also have the unemployment claims. So what is good for the US currency? Actual greater than forecast is good for the US dollar. So if we see maybe like 0.3 for core PPI, if we see 0.6, 0.7 for core retail sales, and then this one 0.4, that's good for the US dollar, right? So US dollar, XAU, USD are correlated. Then what will that potentially do to one of our setups on gold? That could potentially be, if we get that PPI news tomorrow, that could be, if it's positive, the US dollar might see some strength, then gold might sell down. And then this is the area I would watch how gold is trading right now, how it will trade into London, and then how it will trade into coming into the news. And it may be around 8:39. If we get that good hot PPI news, then gold might be a potential sell below 2,170, and it might be a nice swing setup. Okay, guys, does that make sense? What we could be looking for until we have the news come in the market tomorrow. And remember, those numbers could be negative numbers, and then that's going to go, US dollar could potentially start to sell, and then gold will start to pump back up, and then we could look for maybe buys above here. Okay, And another thing, you have to pick your time frame. You got to pick your time frame. If you're trading a 4-hour candle, like see how this 4-hour candle still has 2 hours and 41 minutes to go? There's still a long time. If you do not prefer to wait for the 4-hour candle to close, you can go into the 2-hour or 1-hour. A lot of traders go into the 1-hour, and then this is what you're watching on the 1-hour. See how it's building. You could maybe wait to see if a 1-hour 60-minute candle will close above there. You could wait below here to see if a red 1-hour candle. You can take a trade on a 1-hour if you like, but you have to physically tell yourself, I'm either waiting for a 4-hour setup or I'm waiting for like a 1-hour setup. That's completely up to you. Risk management is all different depending on the time frame that you're trading. So if you're trading a 4-hour, you're going to open up a bigger stop loss because you're looking for a bigger reward. If you're on the hourly, you might consider using a tighter stop loss because you might be just looking for hourly candles to fill. But remember, we're looking for a swing trade. So we're looking to hold this trade for more for maybe half a day, for maybe a day, maybe 2 days, maybe 3 days to allow a swing trade to develop. Remember, we're not scalping. This is not scalping the markets. This is more looking for a bigger move in the markets. Okay, so guys, do you guys understand that analogy on gold? Okay, we went through every single time frame. We went through the weekly, daily, 4-hour, and we know that this is the all-time high, and it's been selling off since then, but it's found bullish support and it's coming right back up. But now you see how we're consolidating. So it's really hard to determine where this could go. Your guess is as good as mine, but we got to take it every hour at a time. And then tomorrow we have the PPI news. That might be the driver to figure out where it's going to go. And remember that what they could do, when the news comes out, they could fake it. Like it could be something like this, where, let me just walk you through it, where the numbers are good for US dollar, and then we should initially see gold sell off, right? But what the market would do is, if they know that they're going to sell gold, and the market in US dollar is good, what they could do is, they know that there's buyers and pending orders up here. They could fake the market out. We were just talking about that, where they could drive it up. And then everyone gets excited, oh my God, gold's going to pump. But then what they do is they take the liquidity up there, they get all the pending orders, and then they reverse it. And then it's a nasty red candle doing something like this, and then the market sells off. Okay. And then that's kind of like your head and shoulder pattern. This could be your left shoulder. That's your fake out head. And then it completes the right shoulder. Then it drops. So remember what they can do. They can also fake you out one way, but don't maybe fall for it until you see something else. But that's more for when we're scalping. But you might also see it on a 4-hour candle, the way how it opens. It might open in one direction and then move the other direction. Okay, so just remember that happens. It happens every single day in the markets, not just when there's news. Anytime they need to grab volume, anytime they need to grab liquidity. That's why it's important to tell yourself, sometimes it's good to wait for candle bars to close, because if you're going in on impulse, and then don't be surprised if you get faked out, and if you're trading the lower time frames, the 1 minute, 5 minutes, you're going to be exposed to so much candles that you might make a lot of mistakes. So that's why, to clean up your mistakes, maybe look at a higher time frame. Maybe start to consider looking at the 1-hour candles. Maybe consider swing trading the 4-hour candles alongside with your scalping, and maybe you might enjoy swing trading. You might enjoy this stuff. Sorry guys, 1 second. I'm just getting a text here. Okay, guys. So let me ask you guys. Okay, we'll go one bias. Okay, I have the bullish bias and the bearish bias. I'm going to ask all of you guys, what is your bias? What if I was to remove one of these? What do you guys think? Do you think gold is going to be maybe a swing sell, or do you think it will be a swing buy? What do you guys think? You guys, Carlos, what do you think? bear, swing downside. Okay, so Carlos says bear, swing side. So then if that's our bias, Carlos, me and you, we remove the buy side, and me and you were looking for sell side, correct? So we, what do you, give me everyone else, what do you guys think? Aaron, probably bearish. Let's see our probability together, everyone on Zoom and YouTube, and maybe we can have a consensus, and maybe we can watch one instead of watching both of them, we watch one, and we give it more emphasis. So I think, Carlos, inflation is hot. If PPI comes hotter tomorrow, I think that's what Catalyst confirms CPI there. Yeah, okay. So I'm my personal bias is I believe that maybe gold needs to cool off and sell a little bit down into here. Maybe they do spike it up, they grab some liquidity, but they move it below here and start to sell it. Will it be tomorrow morning? I don't know. It might be Friday. It might be early next week. But I'm going to keep this signal right here at 2170, and we'll continue to watch this. Okay, guys? So I'll share this chart with you guys. 1 second. Let me give it to everyone in Zoom. Okay, so Zoomers, you have the TradingView link. Guys, on the free Telegram, okay, so if everyone on YouTube, if we can all go to the free Telegram, it's pinned at the top of the YouTube. I can share it in here, either now or after the call, but I'll share it in here. So if you guys can sign up for this, it's our free Telegram, it's pinned at the top. We have this free giveaway right here, maybe get you a 3-month subscription. You get all the Zoom sessions, the private Discord community with the snipers, the scalper pro signals, and all of our education. And then I'll share the chart in here, and we'll continue to monitor it. Okay, that will be shared with you guys in Discord, guys. I will also share it with you guys in the commodity channel. 1 second here. A dump then pump? We'll see. We'll see. Yeah, that's what you got to be careful with the dump and pumps and all of that stuff. Okay, so we'll also have the chart in there for Discord. Okay. So guys, what time is it? Almost 10:30. Let's do another security. What else do you guys want to look at? One more security. Do you guys want to look at crude oil? Do you guys want to look at Bitcoin? Do you guys want to look at US 30, NASDAQ, a currency? What do you guys want to do? Oil? Yeah, I don't think we've done oil in a long time. Let's check out oil, crude oil. Crude oil is nice too. See, like, look at the futures of gold right now. You see how they're trading, like, right at this VWAP? Not the greatest right now. Let's take a look at US oil. Higher time frames, okay? Higher time frame. So, number one, this is crude oil right now. Let's just clean up our charts. Okay, so we're going to start off again weekly analysis. Okay, we're going to be higher time frames. Crude oil now. Okay, so we're almost at $80 a barrel. It's $79.74. Now look at the weekly. What do we see on the weekly? What is our overall? Okay, this one's tough. Everyone's gonna have mixed bias here. What is our overall weekly bias on crude oil? What do you guys think? I show you guys this chart. Bearish, Carlos? Do you guys remember this? When crude oil came down to negative, first time ever since 1970. This was COVID right here. Some of you guys weren't trading at this time. This was opportunity of a lifetime presenting itself here. If you just traded the futures and you bought any call options, you would have made some really good money after we broke down. Again, just using your price action. If you just waited, like you were watching, maybe you weren't part of this, but you see it came down red, it came back up, again, it came down red, higher low, came back up, ignited weekly candle, and there's the bar right there. Monday, May 11, 2020, closed above. Right there. You could have initiated a buy at 30 bucks a barrel and then just drive it up to 40, 45. Even if it pulled back, it continued to drive, and look at it, traded right back into 60s, right into this liquidity. Like, same thing, guys. You see it grabbed the liquidity, came back up, and pushed. Are we ever going to get an opportunity in our lifetime ever to get that again in crude oil? I don't know. But if we do, you better believe we better be ready for it, okay? Because opportunities do present themselves in the markets. You just got to be ready for them. You got to be ready for them. Okay? Now, remember up here. Okay, so let's just go back here really quickly. So this was start of COVID. It came first time since 1970, negative futures, and they grabbed all the liquidity, and they continued to push it up. Where? To previous, not all-time highs, because if you come back all the way here, how many of you guys went back here? Our all-time high on crude oil was back in the financial crisis of June of 2008, when we hit almost 150 a barrel. It was 147. Okay, and then you see how they almost came back up to attempt that all-time high, and this was 130. Do you guys remember an event that happened in February of 2022? Anybody remember anything that happened in here? This was when Russia and Ukraine started. They started back in 2014 and earlier than that, but this was when the first missile was launched, February 24th of 2022. We were trading live. We were actually trading gold at this time, and there was a big move in the market. We were all wondering what happened, and then we figured out that night that Russia launched a missile, and it drove crude oil almost to all-time highs. 147 were all-time highs. We came up to almost 130, and then it pushed back down, and then it came right back up again, tested 123 again in June of 22, and then continued to push down. We rotated right back up again, and it's a lower high. We're staying below the psychological $100 a barrel, and we came back down. But you see now, like, where all of the, like, if I'm looking for a pivot in the market, now you know how we drew like boxes on gold? Where do you think would be some ideal boxes to maybe start with oil? Maybe what I'm going to do is I'm going to start a green box, maybe just right in here, okay? And make it green. And then I can see, this is what a fake out candle is in the market too, right here. See how this one came red, 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 closed at the low? We assume the next candle is going to come up, maybe test the box, get rejected, and then shoot down, and we sell. But look at it, it's a bullish engulfing candle. It comes up into 50% of the right candle and engulfs and closes above. Then there's your buy signal. You can see how they reversed it? It came down red, closed right at the bottom. The next week closed and opened bullish and engulfed it, and then we trading around above the green box and two rejections. You could buy right there. That could be a nice little buy right there. You see the liquidity grab, and then you buy. Place your stop loss below the structure, and then you could aim for number one, like TP1 would be to come up to the previous area of resistance, and then if it can break a little more, you look to the left of the chart. And then what is the next resistance? Right over here. See inside here where there is some support. Support will turn to resistance in the future. And that's how you can kind of look for some possible trades. But you got to follow individual candles. You see the red one faked out the market, came back up. They grabbed the liquidity, push it back up. We came back down into the green box. It broke, but look where it closed. Another ignited bar. Look at the pullback. There's your wick. Close near the high. Again, another potential buy. I know this is after the fact, but this is what we look for every single day. We look for these same setups right there. And again, you target the previous high, and then when it breaks, then you get the bigger move. Okay, but that's where you can start to initiate a buy and have a nice swing trade. Okay, and then see, every time we're coming into the green box, coming in the green box, go back up. Come in the green box, rejected, go back up. Come back down just recently, end of December 2023 in the green box, and we're slowly trying to push back up. But look at the weekly candles. They're consolidating, okay? They're not the best to be trading right now. Look at it. We got green, red, green, red, green, green, big red, green, red, green, red, green. Okay, so they're barcoding, but they are making a higher low, higher low, higher low, higher low, higher low. And before we get down to this green box, what about the structure that's being built right here? Okay, so let's continue with maybe looking for structure right in here, maybe the bottom of those bars and 50% of that green candle, and then drive this box across. So you see what I just did there? Okay, let me just zoom in. So see this candle right here, February of 2024, open, close, half of it is approximately right there, and then I just used the bottom of this candle, the bottom of this candle, the bottom of this candle, and I continued my green box. How far do I want to do it? I'll do it, I'll line it up with my next green box in the future, October of 2024. Okay, so before we come back down in here, we need to test this area, and right now it's barcoding, green, red, green, red. Where's our resistance now on crude oil? Well, look over here, look at the charts, like they're telling you where the big resistance is. If I'm looking where the big resistance is, I look where the majority of these wicks are. How many times did it get rejected right here? It got rejected 1 time, 2 time, 3 time, 4 time, 5 time. Bring it across, 6 times, 7 times, bring it across, and then you see the fake impulse, but they took out the high, and then here it is. This is where it flips. See the big green bar closed above the zone. I would, if I was trading this at this time, I would flip it. As soon as I see my first green bar close above, I take the red box, make it green, and then I could be looking for buys right up there. Now I continue with the box. I don't change it. Now look, it's 50%, look at this red candle, October 30th, 2023, open, close, there's about half of it, and then you see the retest right in the red, same box, push down. So I'm stretching this box across in the future. We're not there yet, okay? This box is around $83 to $82. We're not there. So do you guys understand where I got that from? I got it from this zone to the left of the chart. There's my head. Okay, if I'm considering this entire area, left shoulder, there's my head that broke out, and this I'm again inside the entire right shoulder. So will crude oil ever do something like this, where maybe it comes up here, goes back down here, retest this red, and then we break down here, and then we might see a huge drop in crude oil? Look at that, guys. Is that not one of the biggest head and shoulders you've ever seen? Like right there, left shoulder, head, you complete the right shoulder, and then there's the dump in crude oil. Who knows? Will it ever happen? Like we say, God knows. Maybe it will happen. You know, maybe who knows what happens? I don't know what's going to happen tomorrow, let alone what's going to happen in next year, 5 years, 10 years from now. But I saw it over here where crude oil hit negative. First time, I was born in 82. This happened in 1970 the last time. I've never seen that in my lifetime. So why wouldn't oil maybe need to retrace back down into this liquidity right here at $30 a barrel? That's quite possible. But that's just speculation, right? I'm just speculating. But that's if it follows the pattern. But what also could be developing is maybe one bottom, two bottoms. Now let's look opposite side. So we came down, we held here. See how it kind of, our neckline is maybe like right around here, and then we came back down. This could be a double bottom, and now we're consolidating in this range. So it might come back up here, maybe hold this, and all of a sudden we're breaking out here, close above there. Then we're looking at 90, 100 a barrel, and then we go bullish. But you see, when we're inside a shoulder, it's hard to determine which direction it's going. But right now we're in the upper half. Do you know what I mean by that? The upper half? We're not trading in the lower half right now. We're trading in the upper half, this area right here. So my bias is maybe going to break out bullish. This is the upper half. This is the lower half. We're not trading in the lower half yet. The lower half is down here. We're not in there. So We can't say it's going to be a head and shoulder pattern because we still haven't even traded in the lower half. Do you guys know what I mean by that? So we're consolidating in the upper half right now, okay? So, and then what type of weekly volume are we getting? We're barcoding. It's green, red, green, red, green. If I was a 5-minute trader and I saw this type of price action, what do you guys think I'm normally doing? I'm just saying, guys, this is the trap. I'll wait because we are smart. We know that maybe the candles are just going to continue to consolidate inside here, back and forth, and eventually they're not going to trade. Crude oil is not going to trade in this range for $82.50 to $77. It might, but it might potentially start to break out of here and then maybe come up to 95, or it may break down in the lower half and then we shoot down to this box and we determine what happens down there. Okay, so I can maybe wait for maybe a possible short position down in here. I could wait for maybe a buy long position in here, or if there's enough room in here, I can trade inside there. But this is where we got to go down to a lower time frame. We're talking on the weekly right now. We can go down to the daily and the 4-hour to look for maybe a nice little swing trade. Okay, so on the weekly, we're consolidating. It's hard to say where this is going to go. Okay, but the way how it's looking, it's developing. It's getting a wick, higher low, higher low, higher low, higher low. It's making some higher highs. This could potentially start to break out. Okay, it's been consolidating for a long time. Maybe we need to test back up in here to $90 a barrel. Maybe that $100 psychological level. Okay, so right now, our weekly candle, we just came off a bearish week. We're bullish this week. We have, again, 1 day, 20 hours to go. We'll see this weekly candle, will it close above and engulf? So just like if this was a 5-minute candle, we got to wait till Friday close of the markets to see if it will close above here and maybe continue to push up. If we draw like a trend line, we can draw a trend line. It's showing us it's ascending, but we still have to respect this selling pressure above us here. So now I go from weekly to daily. This is our daily candles inside that upper half of that weekly zone if we're trading daily candles. Are these the best candles to be trading? Not necessarily. Crude oil is green, red, green, red. It's consolidating. There was a little bit of a break, but then it came right back down. A little bit of a break. So I would continue to wait for crude oil to consolidate, to continue, because this is not the greatest to be trading. We can see that there's no trend right now. There's nothing going on right now. But what we can identify is maybe where our daily areas of resistance are with a yellow line, $80.85, maybe right there. So what I got to watch for is something to happen up here on the daily. Every time it gets up there, they reject it. Came back up again, they rejected it. We might be coming up today, but we got to see maybe if we get a daily candle to close above this yellow line, and then maybe we'll start to break out bullish. But they could easily bring crude oil back down where 50% of yesterday's volume. So when I look at yesterday's volume, open, close, half of it is right here, around $78.75. Right there, that's about half. So I can draw a yellow line right there, and then I can allow it to consolidate in between these yellow lines. Maybe watch for 4-hour volume to close above here and retest this. Then that might be my long position on oil. Maybe if it sells back down, it's a low tweezer top highs, lower high, and then they start to push it down and a 4-hour candle maybe closes below that yellow line, retest it. I could look to maybe short the market coming back down here. But right now on the daily, it is pretty bullish. So let's see how it looks on the 4-hour. Okay, so the 4-hour, see how when you keep going down to maybe a lower time frame, it starts to open up things. Like, guys, this is like, I don't know what you guys consider to be like a swing trade or how many pips you guys look for, but this is what I do sometimes, and they're 4-hour candles. So you see how I use the yellow line? There was a red bar, 4-hour candle that closed below. The next 4-hour candle opened green. It came up green, 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 right up to our red line, and then got rejected. You could possibly, just like if this was a 5-minute setup, I could see the rejection, maybe take this sell position when it breaks the body, place my stop loss, maybe above the previous high, and then my TP would be maybe to come down to the bottom of the zone. Okay, and there's red, red, red. There was a pullback and then it came down. Again, you got to measure it for yourself. I don't know how many pips you're looking for, but these are 4-hour candles. So you're 4, 8, 12 hours where it came down and it dropped for 120 pips. Then it rotated back up. If you still it didn't even come up to break even where you entered, and then if it dropped all the way down, you're looking about 170, maybe possibly 200 if it gets down there. But if this is too small of a range for you to trade, then don't swing trade that range. But you can use the skills as a scalper and still swing trade. You just got to figure out your key areas where you're trading. Okay. But right now, see how we're inside. I would want to see if the buyers can maybe close it above this yellow line, but it might be also a nice sell position up there. It might get up there and then maybe fake out up there and then do something like this. And then that might be a nice sell setup from the top of that yellow line. Because I can see in the past it came up, back down. Consolidated, they shot it down. Came back up, rejection, push back down. Came back again, lower high, they pushed it down. We could be coming up again, but this area, if it comes up and let's say they fake out the high and then close it back down on the 4-hour and reject, that might be a potential area where to sell and then maybe place your stop loss above the previous fake out bar, and then our profit would be to look to take it back down to the yellow line, maybe with more momentum. Sellers are in control, maybe 50% of the zone, and who knows, maybe back down to there. And then if I'm measuring again, if I take my sell there, maybe to get it down to the yellow line, I'm looking at 180 pips. If they can break it down maybe halfway, 285, maybe 300. If it comes back down to fill in those wicks, could be a 300-400 pip swing trade. Okay, depending if that's the type of range you're looking to swing. Otherwise, we got to be really patient and then wait for something to happen above here, either strong close, retest, and then we buy, or a fake out and then we sell, or maybe something to happen at this yellow line. But while oil is making up its mind, it's not ready yet. Okay, it's still developing. It's inside here. What do you guys think on oil? Would you guys be bullish on oil on the 4-hour or bearish on oil on the 4-hour? Sideways, Carlos. Yeah. So guys, okay, so let's just talk together. So we only did 2 securities tonight. We did gold and oil. But what we got to do as swing traders is continue to go through the markets and look for the best security setup. So right now, oil is not the best to look at. We analyzed it, we talked about it, but it's not there yet. Maybe gold is a little bit better. Maybe we'll find something else, So this is what we got to do. Maybe we keep this one on the sidelines. This is not a good one for us to look at. It's not developed yet. So we don't need to rush and take a trade in this and just say buy or sell just for the heck of it, So this is something, we looked at it. To me, it's still consolidating. It doesn't look like there's any good potential high probable setups. So this one, maybe we stay away from. Do you guys understand that? This is what trading is, guys. You have to be selective. You have to have time to go through the charts. I'm taking a little bit more time with you guys. I normally, if I'm doing this by myself, 5 minutes, 10 minutes maximum. I've gone through the entire weekly, daily, 4-hour, and then I make up my mind. If I see this, it's not the greatest. If I was to rate this out of a 0 as being the worst and a 10 being the best, this is maybe a 6, 7, nothing great. Maybe the gold setup was a little bit better. But now what we got to do is we got to go back into our watch list, and then we got to find another security. So let's do one more together. What other security on my list do you guys want to do? BTC, Samuel? Yeah, guys, let's do BTC. BTC is fun. Let's do that. Okay, BTC. You have to be careful with BTC right now, okay? You got to be careful, okay? We're at all-time highs on Bitcoin, and this thing could continue to drive. I was hoping to see us tap into 75,000. I'm a psychological trader. I like to see 25,000, 50,000, 75,000, 100,000, 125, 150, 170, so on and so forth. I like those 25 point increments, and here we're talking in the thousands. So I would like to see if Bitcoin can somehow kiss 75,000 and then maybe sell from there. But there's so much developing in Bitcoin. I think we're 37 days away from the halving, and traditionally 1 week, 2 weeks before halving, there's always been maybe a 10 to 20% pullback, and then it broke out for all-time highs. It's kind of how the cycle goes every 4 years. If you guys are not familiar with what halving is, they cut the reward program every 4 years, starting in 2012, 16, 20, and 24, 28. In 2032, every 4 years they cut the reward program. It started in 2012. If you were mining, you were getting 50 bitcoins for creating the chains, for creating blockchains as a reward. Then 4 years they cut that in half to 25. Then the next 4 years they cut it down to 12.5. Next 4 years it was 6.25, and then now is the next 4 year halving is going to go down to 3.12. And so what it's doing is it's basically reducing the supply, which is it's good for inflation, because like inflation, the American dollar, they can print as much money as they want. It's paper, they can print unlimited. But with Bitcoin, there's a limited supply of 21 million coins in the overall market. They've already mined, I believe, 20 million. So the last million are going to be slow. But a lot of the miners right now, with the cost of energy, they're mining and they're not selling the coins. They're keeping them for themselves as a stored value, as digital gold. They're not looking to sell. So, like right now we have the introduction of the ETFs that just opened up like a couple weeks ago, and they're looking to buy 10,000 coins a day, and there's nothing available. Like the miners right now, I think are mining 900 coins a day. So just simple laws of supply and demand, you can understand why this thing keeps driving. Okay, there was great opportunities when we bottomed out down here at 15,000. Let's go to, not on the 4 hour, but let's go to the weekly. Okay, look at this bullish move on the weekly. Like I don't even have to look at RSI. I'm assuming that Bitcoin is completely overbought just by looking at these last few weeks. But you see how it was consolidating? Green, red, green, red, green, breakout. They faked it, red, back down, and then we closed, and then they broke it. So you can see how Bitcoin too, it was consolidating. These are individual weeks: 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks, 8 weeks, 9 weeks, 10 weeks before they broke it out and continued to squeeze to the upside. We took out all-time highs, and this thing, like this chart, looks magical. Like this thing is fun. Just a little bit background about me. I started learning about Bitcoin in about 2010-11. I actually took my first trade on Bitcoin in 2012. Long story short, I bought a lot of coins in Bitcoin. I was part of the Quadra CX scandal. It was the first exchange that opened up in Canada where it allowed me to put my coins on an exchange. If you've watched that movie, it's on Netflix. It's called Trust No One. I lost a lot of coins and I still don't know where they are because whoever created that exchange kind of disappeared, went to India, said he died, could be dead, I don't know, or just faked his death and took everyone's coins. But that's the background. It was very unregulated back in the day. It was very, very hard to which exchange to trust and all of that. But now we have a little bit more regulations. We've gone through the highs and lows. You gotta be strong to trade this type of security. It's not for the weak. You got to be tough to trade this thing. But I'm still in a very, very long position and been holding for quite some years through the roller coaster rides. but I'm more interested in the technology and how it's a stored value of digital gold, not so much the currency. I'm more interested in this is a stored value. This could be something very, very special in the next years to come. It could also be a flop for all we know, but I don't think that that's what the case is. But for now, it's fun to trade this thing, especially if you're looking for to hold as an investment. I have physical gold as well, but I also future technology, maybe digital gold. This could be digital gold. So I hold a little bit too, and I speculate as well. Okay, and this is great for scalping as well. If you like scalping, as long as you have good spreads. But let's just talk about the weekly really quickly. Okay, so if I'm ever looking for another bottom, right there, 15,000. We were telling a lot of people 15,000 is a great bottom, maybe look to buy. Everyone thought it was going to crash after 15,000, continued to come down to maybe to zero. I didn't think that would happen because we've never hit zero. I've been part of all of the runs. Just part of the runs. When I was buying, it was about $11, and then it shot 10x to $111. We had the halving, it retraced back, and then from $111, it went up to $1,100, $1,200, and then we pulled back, and then it went up to 19,000, and then it pulled back to 6,500. So we never really, it always retraced maybe 70, 80, 90%, but never hit zero. So that from 19,000 came to 6,500. Then the next big run, it hit the all-time high right up here of 69,000. And then we pulled back down to 15,000 right here, this green block. Kind of held, didn't break. And then you can see the run we've been having leading into our halving cycle coming in April of 2024. And we have a new all-time high. We're sitting at 73,000 US right now, which is unbelievable. But this is just the start of this thing where it could go. Yes, there could be possible pullbacks into the 50,000, but you've got a lot of big institutions waiting to load up. Michael Saylor, he bought 12,000 coins the other day, and he's buying more. BlackRock is buying a lot too. I think they own 195,000 coins. Michael Saylor is at 205, 210,000 coins. So the big boys are buying right now. So I hope they continue to buy, because I won't be selling my coins until I see 1 million. If they want to buy off me, I'll put one for sale at 1 million, and I'll gladly sell it to them. But I've been holding for all these years, so maybe when it hits 1 million, we'll consider selling one coin to the big dogs. But for now, let's hold for the future. But previous all-time high area, okay, so remember our red zones, red boxes, like previous wicks and bodies, so like right in there. If I'm looking for a red zone, that's kind of my red zone, previous all-time high there, and then we hit into the all-time high, but no volume close. So then let's stretch that box across, and then you can see right now what's going on. Like these are weekly candles, so very bullish. Look at the pullback too. Bitcoin too. When I tell you, guys, look at the Bitcoin, look at the candle, any candle, look at the open, close of the volume, and always, doesn't matter the security, doesn't matter the time frame. Where's half of the volume? Yellow line. Is that half of that candle? Open, close, there's half. Right there. And you see how it opened red, and it came red, and held right at 50% and continued to move up, because the volume below 50%, we call it majority volume. Majority volume rules. It comes down and holds 50, 51%. That's still considered bullish. It's not bearish yet. So we got to continue to go up with the trend. And we continued high. Again, if I'm just looking at the previous week's 50% volume, let's place a yellow line maybe right there, 66,000 and some change. And you see the next week what we just opened up. We opened, retraced back down, red. We still held above 50%. We continue to push up and take out the previous high wick, and we're trading near the high of the week. Now, this is discovery zone. This is price discovery. Where could this thing go? Again, only God knows. But I go with those 25,000 increment moves. So I'm going to place a purple line at around 75,000. Just to give me a heads up that if it gets up there, it's a pretty psychological area. 75,000. What is my next one? Would be 100,000. My next psychological zone, 100,000. Okay, I know it's a big zone, but if we're just doing psychological numbers, the quarter increment moves to 75, 100, 125. Okay, it could potentially continue to break and continue to go, but do we need to look at the RSI indicator to tell us that Bitcoin is at 90 on RSI on the weekly? I don't think we need RSI indicator when we see what's going on here. But that's the thing, guys. When you try to short this thing, just because of this RSI indicator is telling you to short, there's not even any bearish divergence. There's nothing. This thing is strong like a bull. This thing, you have to be careful. If you try and short this thing on any time frame, you could get squeezed and stuck. So what we got to do is maybe we got to start to figure out some new levels. Okay, so this big red box, we have volume above it, so I make it green. I could be looking to maybe possibly sell Bitcoin below 65,000, below here. If it closes below, maybe retest this red, then we get the drop coming down to the 50s and maybe needs to consolidate in there. But we have not even had a major pullback into this green box in 65,000 to even justify anything yet. So it's still bullish. Let's move over to daily now. Look at the daily. Okay, so the daily is ripping. There was a nice day in here. Carlos, this is when I think you took that sell. You remember at 6, was it? Or was it like, I think it was one of these daily candles. I'm not sure. But yeah, it dropped for quite a bit from 72 to 68,000. Yeah, 5,000 drop. 73 to 68. Beautiful sell, but all it did was just maybe cool off the RSI on like the lower time frames, the hourly, the 4-hour, but didn't really cool off the daily or the weekly, and so the big investors kept buying it up. But it was a beautiful sell, Carlos. 73 to 68, excellent. So there's going to be opportunities to sell, but that doesn't mean that like Bitcoin is going to crash. It's a healthy pullback, came down, and then it was bought right back up. This, I think it was over here, Carlos. You had to sell at 73 and it dropped down to 68 and it came right back up. Okay, but we cooled off the lower RSI on the lower time frames, but still very strong on the daily. Like we're continuing to make higher low, higher low, higher low. Bullish candle, continue drive. Let's see if maybe we tap 75,000 and then that's going to be where the big resistance is. Now you can see, okay, on RSI, the first peak, second peak is lower, third peak is lower. So there is a little bit of decrease in the strength on the daily while price action is continuing to make higher highs. So that is showing me that there is bearish divergence on the daily, but still no bearish candle closing below any critical areas. When I look for critical areas, now I look for body, body, body right here. So this is where I draw maybe a yellow line right here. And then this is where I potentially look for a swing trade. So right now we're still consolidating up maybe near 75,000, and then maybe if we can close with red volume below here, then maybe that might be an opportunity to look for a short. But we have to be careful because this is the first leg up. Like this is the leg up. We might come back down red. So we need a physical red candle to close below this yellow line because we came down red there. It was red and it came right back up. We came down red, came back up. So I don't want to just go red and come right back up. I want to see a red candle close below this yellow line, close below 71,000, and maybe close below and retest it. Come back up and retest it. Then it gets rejected. Then I know that the supply is locked in the market. Maybe they're holding it down here with a lower high. And then maybe I potentially look to sell Bitcoin back down to 65, maybe, who knows, maybe in the low 60s, right? Trade into this liquidity here and not break that wick right there when it did come down to 58,000. Okay, so that might be a potential 4-hour trade. I'm waiting for maybe a 4-hour bar to close below there. This is where we could be consolidating now. And also, that 75,000, that purple line I put up there, again, Will it hit 75 exactly? Maybe not. So what I do is a little bit above and a little bit below the purple line, and then I draw my red box. And then I wait up there. And then maybe if it wants to potentially squeeze a little higher in there, that might be maybe a possible area to maybe look to sell and then maybe push down. But still, I have to be very careful because it could just pull back a little bit and then continue driving. Like right now, it's a train, so you have to be careful. Now the 4-hour candles tell a different story. So they're kind of coming down, going back up. This was that big drop right there on the 4-hour. Came back up. We're coming back up again. But you see, so I'm waiting down here for maybe physical Bitcoin to close below there. And that's where maybe I could maybe look to initiate maybe a short position on the 4-hour. And then look for it to come down to fill into the yellow line, maybe possibly to the bottom of that green box. Okay, and then right now, again, the 4-hour candles are consolidating right inside here. Maybe I need to let them consolidate for a little bit more. Maybe we need to finish off this week, go through the weekend, and then maybe next week it might open up, and then we can see what's happening. But see how it's just trading inside here? What's your bias on Bitcoin? And it could continue to drive, guys. Like this could be continue to break out of here, retest this green, and then all of a sudden, Ron is wrong. It's going up 80,000. Okay, very well could do that, but this is, again, we're in price discovery zone up here. Like we've never been up here. So, and then I can see that there is a little bit of divergence on the 4-hour. I could see that there was divergence developing on the daily. So maybe my bias is more leaning towards selling as opposed to buying the all-time highs of Bitcoin. Okay, does that make sense, guys? Maybe what we got to do is wait for maybe a 4-hour physical candle. And I don't want just a 4-hour candle to just come down red and then go right back up with a wick, because then it could be continue to be really bullish. So we need a red physical bar to close below there. But see this, there was like a red bar that closed below, but the next one was green and came right back up and closed above. So we need it to close red below there, maybe retest and then get rejected. Then we look for a potential sell setup on Bitcoin. But for now, it's still bullish. We have to respect that. Don't get caught trying to sell this thing because you keep telling yourself it has to sell. I hate that when traders say, well, Ron, it's got to sell. It has to sell. It's overbought. It's been driving. The markets don't care about you, and the markets don't care about RSI. If the market if Michael Saylor and BlackRock and all the big boys and all the ETFs want to keep buying, these guys have unlimited supply of money. They can keep buying and buying and buying. It's a game of supply and demand. If no one is selling their coins, it's going to force them to buy higher. No matter what RSI is saying, no matter what MACD is saying, no matter what your favorite technical indicator is saying, no matter what your neighbor or your cousin is saying. The markets don't care about that. Do you guys understand that? If this wants to go, we could wake up tomorrow morning and Bitcoin is at $100,000. Like it doesn't care about us. This thing, if it wants to drive, it will continue to drive. These small little cool-offs, that's enough to cool off the RSI and to continue to let this thing continue to drive. Okay, that's all it needs. Are these, like you see this big red candle? It just needs a couple of these once in a while to just flush out the market, and then it comes back up. Flush out the market. Carlos, this was the bar that you sold. It was this one. It came down, and it was quick. It was Tuesday, like 4 hours. It came down quick, flushed out the market, and then came right back up. So sometimes that's all the market needs, are just these flush out candles and then continue to drive. So you have to be careful. That's why we need to wait for a physical red bar to maybe close below there. Okay, guys? So that's Bitcoin, guys. I'll give you guys this chart also in Zoom. So tomorrow, what we'll do is we'll continue to review our higher time frame gold, and we'll check out oil, and then we'll do more charts, guys, tomorrow. But I just want to tell you guys, for the future, when we do these Tokyo calls, we're going to focus on more swing trading, you guys can tell me what securities you want to look at, and we can look at them together. We'll save the scalping for more New York sessions when there's better volume to scalp, and then we'll focus on swing trading for Tokyo. You guys can ask questions. It can be more of a good education, and we can learn how to swing trade together and learn also technicals about trading, price action. Remember, everything we learn on the 4 hour, you can use tomorrow on the 5 minutes and just apply it to whatever security you trade. Does futures work the same way? Samuel, absolutely. Futures are the same thing. It's just going to match up with these numbers of the depth of market. We don't need to use trading view charts anymore. You can go right into the futures. But if you're trading NASDAQ, you're looking at NQ. If you're trading Dow Jones, you're looking at YM. If you're trading gold, you're looking at GC. If you're looking at crude oil, you're trading CL. You just got to find the ticker that corresponds to the futures market. And futures market is really, really good. Yeah, it's futures are the shit. You're right, Carlos. No spreads, same price across the board, no BS. So, and there is good futures prop firms out there that are regulated in the United States. They're based out of Chicago and New York. So, guys, if you're having difficulty with Forex or picking out a broker or a prop firm, look into the futures. Look into futures market. We will possibly be moving into the futures as well. If there's not much more to do with forex, we'll still do forex, but we want to get you guys more involved in the futures. Also, we want to look at the options market, guys. We want to be able to trade Tesla with you, trade Nvidia with you, trade anything in the stock market with you. So there's a lot of fun things coming up, but always what we'll be doing is price action. Okay, so number one, make sure you can identify your support resistance areas. Make sure you know what a bullish bearish candlestick is. Make sure you know what a rejection wick is on a candle. Make sure you know how to switch your color of your boxes red to green, because we'll be doing the same thing with futures securities. We'll be doing the same thing with stock and option securities. Same exact stuff. But make sure you learn this, okay? Yep, the only difference is micro and mini lots and things like that. So, and then when we trade futures, we're not, pips no longer is the language. Pips is for Forex, percentage in points. When we trade futures, we're talking ticks, Ticks. So that's the new language. Ticks, not pips, so we can still tick and dip. I know it sounds stupid, but we'll be ticking and dipping out of the markets, okay? But guys, I had a lot of fun tonight. Thank you guys, everyone on YouTube. If you guys can hit the likes and subscribe to the channel. Remember, guys, please join our free Telegram channel. We'll share the charts with you guys in here. We give you free trade signals. This is the 3-month giveaway, guys. Dave and I read this thing, so please give us a comment. Like, follow, share, and comment. And look at what the comment is. It's what's your trading goal and what fuels your ambition? Let us know, guys, for real. Like, let's all talk for real. What fuels you guys as traders to keep doing this? What is your trading goals? Let us know. The best comment will win a 3-month giveaway with us, and then you get access to everything. You get access to all of our live Zoom sessions with myself, with Dave, with PK, and Shahab in London, New York, and Tokyo. You get all of our education content. I can show you our website right now really quick. You get the private Discord channel with Carlos, with Forex Borex, with Scotty, and all of the other amazing snipers in there sharing their charts and giving their guidance and education, helping everybody. Thank you guys for doing that. And then our Scalper Pro signals. This is the website, guys, like back end education. We have a lot of stuff in here. We're continuing adding daily. So you get the boot camps. You get the Intro to Forex 5-day boot camp. The order flow one we just did, 3-4 day. The 4th day was live. Psychological of Trading 5-day boot camp. You get courses, Intro to Forex, Forex fundamentals, candle characteristics, support and resistance, technical indicators, strategies. They come with quizzes, and then our webinars are all over here. This is like our beginner webinars, 1 to 10, to get you accustomed with just learning what is the basics. Then the next one is 11 to 30, starts to get into a more intermediate webinars. Then we have these ones, 31 to 100 plus. This is more of your advanced webinars. You're using now all your concepts you learned. We have Q&As, workshops, Bookmap, all the live sessions, everything, guys. So and we're going to continue doing new things with you guys. But just please, guys, if you can, just practice your proper risk management. Let's stop blowing up accounts, okay? I know some of you guys are still blowing up accounts, some of you guys are still learning, but please guys, just stop over leveraging. Stop buying a prop firm and try to pass it in 1 day, 2 days. It's not going to happen. You're going to make one mistake and you're going to lose the account. Take your time with trading. Some of us have been trading for 5, 10, 20, 30 years in the markets. You're not going to learn this overnight, and you want to make money over time. You don't want to just, you want to do this where you're making consistent profits. You're not going to do it every day, but majority of the time you can do this daily. Get in, get out, get your daily goal, and go on and do your other things. I know some of you guys are going to school, some of you guys are working, some of you guys are busy, you got other things to do. You don't want to just stare at the charts all day. But if you do this properly, you understand what you're doing, you will do good at this. Okay, it's not too complicated. I feel that traders these days are making this too complicated, more complicated than it is. Remember, just keep it simple, keep it easy. Don't confuse yourself. Like when I was trying to do today's webinar with us, today's live, I was just keeping everything very simple with you guys. Just figure out your zones, flip the color, be patient, be disciplined, understand that the market can fake us out there, but then if it does, we can trade in the other direction. We follow the fake out. Okay, remember that. Not every trade setup is 100%. That's what trading is. You got to be patient, you got to be disciplined. But you also got to understand, just because Ron has a sell signal here doesn't mean that this is going to hit 100% of the time. If it's a fake out and Bitcoin comes down here and kind of it's a red candle, liquidity grab candle like this one, comes down, comes back up, closes above here, and then driving, I could take that sell signal and then start to look for a buy and not take the sell, and then I'm in a buy. So it's just allowing the market to come to me, and then I decide what to do. So sometimes just be patient. The markets are a platform to give the patient people the impatient people's money. The impatient, impulsive traders, investors, they're the ones that are losing money because they're making fast decisions with no confirmation. You and I, the patient, disciplined traders, the smart traders, we can sit there and wait and eat off of them. We can capitalize on their mistakes. And market makers make mistakes too, because retail traders are starting to get really smart and starting to learn how this game is played. So guys, I just want to salute all of you guys. If you guys are still in this, you guys are still putting in the time. I know it's maybe you're not where you want to be as a trader, but don't give up. Don't give up. None of us gave up. There was times where I wanted to give up, but I never gave up. I knew that I was going to figure this out, this game. It's a game. Okay, if you can figure out, if you're good at playing games, you'll figure this out. It's a game. But you have to be very, very smart to understand that things are not always going to go your way in the markets. Things don't go my way in the markets as well. There's some days where I have shitty days too. But I got to understand that I can't allow that to happen tomorrow, the next day, and next week. I got to kind of learn from it real quickly, learn from the mistake I made, and then pick up from that and continue going forward. That's what trading is, guys. It's kind of evolving. It's kind of learning more about yourself, and you become a better person, and then you start to learn these markets. But I know that everybody can do it here, because you guys are hungry. You guys want to learn. But just take your time. Don't rush the process, guys, okay? And we'll see you guys tomorrow night, same time, 9 p.m. We'll get into the charts. Tomorrow we'll do more charts. I won't explain as much as I did today. We'll get right into the charts. We'll do more charts, maybe 5 charts tomorrow. Maybe you guys, you know what? Let's have a homework assignment tonight. If you guys can do a little homework for me, tomorrow's session, if you guys look at 4-hour securities, and then you guys look for good setups that are ready to go, maybe some buys, some good sells, and maybe we don't need to waste our time looking, and then we find consolidated securities. Maybe you guys can tell me tomorrow USD JPY is set up perfectly for a nice 4-hour sell opportunity. Then we can go through charts together as a team, and then we can look for good swing trades together, and then maybe make the best of it, the most of it, and maybe we can all trade it together, and we can all make pips together. But if you guys want to do it tomorrow, some of you guys maybe have some charts ready. Otherwise, I'll just go through our standard charts that we do. Gold, Today we did crude oil. Maybe tomorrow we'll focus more on Nasdaq, Dow Jones, S&P. Maybe we'll throw in a little GBP USD, GBP JPY, maybe USD JPY, or maybe just anything. Okay, guys. And then slowly we're gonna start introducing other stuff. We'll be looking at maybe Tesla together. Tesla's killing you, yeah. There was a lot of news that came out with Tesla. There was a big short put on Tesla, so careful with Tesla, guys. If you are trading it right now, there was a big short position put out on Tesla. So I don't know how that's going to affect it in the next couple of days, no drip, but just be careful with Tesla right now. But just be careful, guys. Okay, time for me to go to bed, eat, and drink a little bit because I only have a couple more hours to go, and then got to get some sleep. And it's Ramadan, guys, so I'm fasting. So some of you guys are fasting too and doing really well. So I salute you guys too. Just stay disciplined, guys. You know, fasting does teach you a lot about discipline. You know, it teaches you a lot about mindset. Teaches you how to not think about things that don't matter. Like for me, food doesn't matter, drinks don't matter. I can go 12, 15, 17 hours without eating. I think of the people around the world that don't have food, you know, that are fasting every day, and they don't have a choice. You know, they're just, I have food, the fridge is full. So if I don't need to eat a day, I can do it, no problems. But I think of people around the world that have no fridge, have no food. You know, they're fasting every single day, not by choice. Like they have absolutely no food, you know. So, just the discipline, guys, you know, and it can help you with trading as well. If you can learn to control your mind, control your mindset, not to think about food, not to think about drinking anything, it kind of keeps you disciplined as a trader as well. So you know when you're in the zone, when you're trading, if you make a mistake, you can easily correct it and come back. It's a lot of traders I see that can't control their mindset after they take a loss. They're kind of lost, and it's hard for them to recover. Then they start to revenge trade, and then they start to do silly things because they lack discipline. They have no discipline. So I tell them, you need to work on discipline before you even take your next trade. All of us, we all need to work on discipline. And you can take your trading to the next level. Some traders ask me, I know technicals, I know fundamentals, but I keep losing, I keep losing, and I keep losing. And I say it's simple. You're lacking discipline. It's not that you're lacking the technicals. You probably know price action better than me. You probably know fundamentals better than me. You probably know the markets better than me. You probably traded more longer than me. But the thing is, what separates me from you is I might be a little bit more disciplined with my trading with you. So that's the thing that we need to work on, guys. Stop looking for grand slams every day you trade. Look for those little singles, those doubles. That's how you win a baseball game. Singles, doubles, load up the bases, keep cashing in every single day, and that's how you're going to start to grow your account. You'll start to get confidence with your trading. You'll have your aha moment, and you'll start to get this, guys. And then the rest is history after that. And then put in 1 year, 3 years, 5 years, 10 years, 20 years down the road. And then you're going to look back at your journey and say, man, I did really well. I got this. I understood what the assignment was. The assignment was to stay disciplined in these markets. Wait for the opportunity. When the opportunity comes to you, you take advantage of the opportunity. If there's no opportunity, you don't take the trade. It's that simple, guys. Not every single day is going to give us trade setups. You got to know that tomorrow there might not be any setups. We got to wait till maybe Friday, and then maybe Friday might be a better day. Maybe Thursday, Friday this week are horrible, and then we got to wait till next week. We got to wait an entire week to get back into the markets. There is days like that happen, guys. You got to learn that. It's part of trading. Don't feel like you have to always be buying and selling every single day in the markets. There might be days where you'll be on the charts, but you're not taking any trades because there's no trade to take. Okay, guys? But thank you, everyone. I appreciate everyone on this call. Carlos, thank you for being on the call with me, bro. We're going to do, Carlos, a call together. I want everyone to hear your voice. I want everyone to hear you whenever you're ready. Join, unmute your mic, and then come on the call with me. I want to hear your voice too. I haven't heard about you in a while, so we'll get Carlos on here, guys, with us. And Carlos is a fantastic person. and we'll get them on the call with us. Okay, guys? So thank you, guys. Have a good night. God bless everyone, and we'll see you guys tomorrow. Get some rest, guys, and have a good day. And careful trading the PPI news tomorrow at 8:30. There's 5 red USD folders at that time. So careful trading, please, guys. Understand that. There's going to be some crazy volatility tomorrow at that time. Okay, big range candles. They might stop you out. Maybe the best thing is not to be in a trade until after the news settles. Okay. Thank you, guys. Enjoy your evening. We'll see you guys. Have a good night. Thank you, guys.
Hey guys, good morning, welcome to another live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, you guys, 200 pips, please, secure.